Hey everyone, this is here. It's a Friday at 4 p.m. GMT, and at this time we go live and we talk about one thing and one thing only that will help you to move forward in your business in terms of how you manage, uh, analyze, and project your cash flow in the business. So today we're going to talk about how you analyze cash flow so that you can find out the break-even point in your business and why this is important. This is important because this helps you to figure it out, like how much cash do you need as a cash runaway and in projection in some cash flow cushion that you need in your business on a monthly basis so that you're covered, and any extra cash in terms of free cash flow in the business you can reinvest in your business. If you're not generating that break-even cash flow, then you need to change something in your business. That's why it's important to find out the break-even and in sales in the business so that you know you break even cash flow. Now the question is, like, how do you do it? What's the simplest way of doing this? The simplest way of doing this is that, so when it comes to um, cash coming in your business, and then you have a cash inflow. Let's say that you get $100 from a client. Then let's say that you have to pay someone else $50 to do the job. And on top of that, it costs you like $20 to run your business. So you're left with $30. So what this means that you need to have $20 and a month just to open the business and in your business. And this you have to pay regardless whether you make sales or not. And that's so crucial to know these figures because if you don't generate at least $100 worth of sales and you get cash in, then you won't be able to generate at least generate the $30 that you need to run for your personal self and later on running the business. So it is knowing this, the what goes in where, and it and also the knowing the structure behind it is so crucial in terms of the how you can work out your break even sales in terms of cash coming in the business. So in this example of $100, so in order to earn, in order to have this $100 cash in the business, then you have to pay someone else $50 to do the job. So you have to give $50, and on top of that, it costs you $20 just to run your business. So in this example, your break-even sales is $70. At this point, you don't make profit nor you make a loss. Yes, you've invested time in the business, hoping that in future that this will leverage and you will make more money in the business later on. For now, just to break even so that the business doesn't um, generate any profit nor loss, you have to generate $70 cash in the business. This is the simplest way of working out the break even in, in your business. So that's how you work it out, the break even sales in the business. Now we can go deeper on this and the layer by layer basis to work out at the break even at each level. Okay, what do I mean by that? For example, we can start to talk about the break-even cost per lead is. So you not have $100 cash coming in, and so that you need to pay someone else $50 to do the task. Then you keep $50 as your cash flow margin in the business, and out of that, now you start to work out like how many sales calls do you have to make so that one person pays you $100. That's one part of the equation. Then it comes to, okay, how many sales lead do you have to have so that you have a sales conversation? That's another conversation, a conversion matrix that you need to be looking at. Then you go back, you go even deeper, which is like how many people who lands on your ads then goes into your sales page. And that's conversion matrix that you need to go. So on a typical rate, there's a conversion between anything between 1 and 3% who are at the buying stage of the journey. So if you think about, if you reach out 100 people, new people, and then out of that, between 1 and 3 people are in the buying state. They're ready to buy. So if you look at this matrix, and if someone is paying you $100, and out of that you have to give $50 to someone else, and that's $50. And now let's say that on top of that, you have to pay for running ads and things like that. So let's say that comes to $25 on average. So that's $75. And then on top of that, and you have to add your $20 expense that we talked in the beginning. So that becomes a 95, 50 plus 50 plus 25 plus that's 75 plus 20, $95. And if you just get $100 from your client, and you're just left with $5, now you're not left with $30 as we thought we originally was. Now you're left with $5. And that's a scary position to be in. Like $5 doesn't give you enough bandwidth to do anything to get it wrong. So you see that how we can go deeper and deeper on this to work out the break even a point at each point of the cash flow journey, so that you can work out the break even sales. So that's all I have for you today. So uh, you want to be checking on this on the metrics in your business, in terms of from the point that um, a cold traffic whole person that you just been in touch with, you become a warm lead and awareness, then come to the top of funnel content like awareness, then they come and do research bit, the middle funnel content and metrics, and then come to the bottom of funnel content about, okay, now they want to have a conversation, they want to self implement what you've said to them to do first, and they think like, oh, I can't do it, and you are the best person to guide them to do to implement the task. And so you want to be checking that and checking on all the metrics and working out the break even at each stage. And if you want to go deeper on this, like how do we work out and what do we do go from here, and then and then do send me an email, or you can just reach out to me on social media, and I can share the training that I'm creating for you, so that you can have the worksheet and all of this for you, and you have a step-by-step approach of how we do this, from a sales to a cost of sales, buying, cost of acquiring clients, to delivering a client, like what are the proportion, like what are the margins look like in terms of running the expenses, what the expenses to sales the percentage looks like. And if you want me to give you a checklist and step-by-step approach on this one, do reach out to me, and I'll be more than happy to do that. So that's how, but you work it out, on the top level, that how do you analyze cash flow in such a way so that you work out the break-even sales in the business, and you generate more free cash flow in the business that you can reinvest in your business, because cash flow is a fuel. That's what moves the business forward. So if you have any questions here, then I'll be more than happy to answer them. Mohit, thanks for tuning in, Mohit. You're welcome. Okay, awesome. So that's all I have for today, and I wish you guys all the health, wealth, and happiness. I hope this has been useful to you, and to invite your friends and your colleagues and who you think that would benefit from having this conversation. Every week, I pick up one topic and one specific category topic that we go bit deeper in here, and we talk about it. It's good to have a conversation. If someone is asking me a question on this, then I can go deeper and deeper, and I can answer all the specific questions that you have around specific to your business. I can take a we can do a Q&A here and right here. I'll be I'm not interested in I can do all of this here, and if we don't have any questions, then I'll stop today, and I'll look forward to seeing you next week. Have a great weekend. Bye for now.